What's up, guys? Good morning. So today, my theme for today is just what the hell is going on. I mean, it's nuts. We have jobs numbers have come out. We're going to see what happens with that. Janet Yellen has come out. We're going to see what happens with that. Home starts are crashing. Everything's a disaster, but stocks keep going up. So, we'll see. Okay, how are you? Alrighty, so futures are up as per usual. What is the where's the S&P? All right, so we're getting close. S&P 4,000. Here we go. Let's see if we get there today. First things first. Let's minimize this, and let's do jobs. So jobs numbers came out this morning. We are back in the 700,000 jobless claims again. I mean, like I've said, I think that the main issue is, of course, it's not vaccines, it's not this and that, it's how many businesses have gone under, especially restaurants. You can't put people back to work if jobs aren't there. I think it's gonna get worse, and now I'm seeing that we have the $2.3 trillion infrastructure plan now. So we're going to print more money and give more money away. This is just, it's endless. It's just endless. This is not going to end well. That's all I have to say about that. Let's do Janet Yellen. So Janet Yellen, she's starting to scrutinize these hedge funds because of what happened with this. It's a U.S.-based family office. Here we go. Archegos Capital. So they were the ones with the $30 billion margin call last week. And that's what shook markets. That's especially what shook Discovery and Viacom, a couple of others mentioned in this article. But so now the president's Council of Financial Regulators have signaled a sharp focus on hedge funds on whether their trading possesses dangers to markets. Okay, so this is my favorite part. The group has revived a task force on hedge funds so agencies can better share data, identify risks, and work to strengthen our financial system, because we know that the best way to fix the private sector is to let the public sector fix it. Adding use. I mean, they're saying that they took funds from. Here's another problem I have. They took funds that were given to them by the government for this COVID CARES Act. Maybe it was that, maybe it wasn't, but they took that money. You give it to the private sector, you give it to public citizens like you and me, and we can go spend it however we want. Like I've said on Monday, Nike had a 10% increase in shoe sales since those stimulus checks have gone out. But if big hedge funds go out and spend money and leverage themselves and whatnot, that's perfectly fine. Should not be allowed this way. That's what I have to say about that. Everyone just wants to go after the big businesses, the big hedge funds. It's not right to have this double standard just because it's not right to go after the rich in this scenario. It never works out. Never mind. I'll digress. Okay. Deliveroo IPO stock flopped raises questions for Goldman and JP Morgan. So we have all these IPOs going out. We have all these SPACs going out. And now we have one big IPO that flops and dropped 26% in its first day of trading. And now we have to go and look and say, we have a problem. Now there's misvaluation, this and that. Come on, get real. Just because something doesn't go up in price doesn't mean that... I'm getting a little annoyed today. This is crazy. So their eye-watering first day share price fell and prompted questions for blue chip investments that worked on the deal. Deliveroo's shares sunk 26%. I'm assuming that they deliver food or something, groceries. I really don't know. It marked the worst day performance of an IPO in the city for at least a decade. Sweet. Well, somebody has to take that role with all of this, all these terrible valuations that are going out. And of course, it is the lenders who should be blamed, but whatever. The share price slid this morning, raises inevitable questions about what went wrong. So clearly the valuation wasn't there. To me, it's probably, I've never even heard of this Deliveroo, so it's probably, what am I trying to say here? They don't have the notoriety. Let's see. A book runner's job is to speak to a client, in this case Deliveroo, about how much they think that the company should be worth. Then talk to the big institutional investors and come to a conclusion. So they were off. They were way off. Yeah, I know it's in the UK. That's probably why I haven't heard of it. And then they come and say IPO pricing is a gray art. It's a gray art. To me, it's a pretty black or white art. You just overvalue it and let it go. There's no gray area in there. You are going to overvalue this. A company that comes out should not be worth $30 billion or something like that if they're generating revenues under $1 billion. It's not for this example, but I've seen them. Often the problem that there's too many people around the table saying what they think and what everyone wants to hear instead of what they should be hearing. And finally, I heard something that makes sense. That somebody said it, but that's that. We're going to see a lot more of these. A lot of these IPOs, they're not going to exist anymore. It is what it is. This is what happens in bubbles. Next, home sales. Home sales are plunging. So they're down 10.6% from February. And I have not looked at home starts. Home starts are also a big number. So these track the number of homes that are under contract to be sold. Home starts obviously track the number of homes that are going to be started, as in building and whatnot. So I'm assuming that because industry is down, wood is very expensive, home starts are probably down because the cost of building is crazy right now. I was going to buy a piece of land and build a home. Instead, I bought a house because for me to build the house that I'm buying, I wouldn't be surprised if it cost twice the price just because of the construction costs nowadays. So that's definitely going to defer people from building homes, especially if they don't have jobs, which we are seeing. So that's that. Let's see, last one. And I want to just talk about this 5G stuff. So I had a couple people come to me in 2017, 2018 saying that 5G is the next big thing. It's going to be great. Then they're saying that 5G is going to be great in medicine. We're going to be able to be in California and do a surgery in Cleveland through 5G service, robotic surgery, obviously. Then it was saying, okay, we're going to spread 5G all over the world, this and that. And my comment was, and maybe it was a little bit extreme at the time, but I'm still saying it right now, 5G in the form that they are advertising it is a total fallacy. It is impossible to happen in the time frame that they're giving. Verizon has come out with 5G. My dad and brother were in Cleveland over the weekend, and they have the newer phones to go on 5G. My download speeds were faster than theirs with 4G LTE. There's no way that you're going to be able to do surgeries in the next 5 years based on 5G. Then, for example, they want to get it out throughout the entire world. I was in Aruba for a very long time. They barely have 3G in Aruba. You're telling me that you're going to put 5G in island countries like that? And I mean, it's just not. There's way more third world in this world than there is first world. So is Tesla about to pop again? Some of the trading charts look interessante. I will look at Tesla first, Seth. Anyways, Verizon signed a contract in Europe. The deal is, I don't know what this deal is, but I know Nokia is a big player in this. Microsoft is a big player in this. But to me, guys, I'm not saying that 5G will eventually be there, but I think by the time 5G is never going to be where they're saying it's going to be, it's not possible. They don't even have LTE in the majority of the world. And you're going to tell me that there's countries in Africa that are going to be getting 5G and we're going to be able to do it the same kind of service that we're doing in the United States and Canada and Europe? It doesn't add up, guys. It doesn't add up. So let's see where we got here. I want this, and I want this, and I want this. Where is it? All right, cool. Let's do some stocks. So I'll look at Tesla first. Oh, you want Sherwin-Williams? Wait, what? Sherwin-Williams is down 65%? There's no way. There's no way. Hold on, I'm really confused right now. What the hell? Are you sure this isn't a glitch? There's no way that this is not a glitch. Let me go here. Market Watch. There's just no way. Sherwin-Williams. Oh. What? I'm so confused right now. All right, you guys figure it out and let me know, because if this is true, there's bigger problems in the world, because Sherwin-Williams is a damn good company. All right. Oh, they did a split. Explains it. That explains it. All right, let's look at Tesla. So I'm going to zoom out here and just check out the long-term chart. All right, so Tesla is... This right now, what is happening, and let me zoom in a little bit more. This right now, what is happening is called a snapback. So a snapback is basically... Here we go again with my charts dimming out. A snapback is basically when your trend is down and your stock price is snapping back on you. So this is what creates those, in this case, because it's a short, this is what creates those M formations. So you're creating those higher lows, which gives you a little bit of strength to move down in the short. Now, Tesla has been down here. They've been doing the sweet spot reversal. So what that means is that the stochastic is kind of just going in a downtrend and an uptrend. And currently it's in a downtrend. So what I'd like to see here, if something happens from Tesla, I could see it going sideways for a little bit. News should come out. I think you're putting pre-orders in now for the next generation car, the Model S, which is pretty awesome update if it's actually true. But what I would want to see is this red line, break through 32% and start moving. With that, you will start to see, hold on, green. Okay, this is driving me crazy. Those in the Bid and Ask Nation, you know that this has been driving me nuts for a couple of days. All right, you're going to see green candlesticks start to move up like this. And that is going to be, it's going to start to look like that with green. So if you get this and these moves, you can do something. It's going to be very difficult. See, we're sitting right at the 100-day moving average right now. So that is a very strong support line. It's also a strong resistance line. If we can push up, get through the 50-day, Tesla could definitely make some kind of run back to $900 a share. But I don't know. Tesla's it's a good hype stock at all times. So let's see here. Oh, 3-for-1 split. Okay, that makes sense. Thank you about the Sherwin-Williams thing. So Sherwin-Williams did a 3-for-1 split, and that's why you're down that price. I was looking at that saying, there's no way that these are our prices. Colin, CHPT, what is that? Oh boy, here we go. Okay, let's look at a stock that is not even 20 days old. So here's what I have to say about this. I just zoomed out as far as I can on this. This thing isn't even 25 days old because I don't have a 25-day moving average over here, which is my purple line. So I don't really have anything to tell you here on a chart from this perspective. If you want to do it, you have to come over here, CHPT. This is a hype minion stock, and I would hope that nobody in my Bid and Ask Nation trades this unless you're on a 15-minute chart. No, Colin, the point is I don't know if it'll fill the gap because there's nothing for me to base it off of. I have no clue. Now let's go and look at Walmart. So this is the gap that he's talking about right here. Remember, we have this much chart to deal with. That's it. I always say that the chart is like an entire story. And if you're not looking at if you don't have the whole book, what are you doing? So let's zoom out 6 months. This is a gap on Walmart right here. This I have decades of charts to look at and zoom back to. We are betting that this thing will move up and fill that gap. That's our bet right now. We have a tracker share on this as a Bid and Ask Nation. So if we can get through here, get through the 50-day and the 200-day, and then push through the 100-day, that'll get us to fill this gap and move up in price. And if we can fill this gap, then we can get up to this 155 area. So as far as charge point goes, day trade it, but no, that's it. Come on, guys. No foreign companies and no new hype companies. We only have 30 minutes for Mo. Good point. I'm not going to do Alibaba. I've done that so many times. This is that tattooed chef thing. The tattooed chef. What do they do? Is this like a competitor of, look at that. They didn't do anything and then they just exploded. The minions came to life. All right. Is this one of those fake meat things or something? Oh, good call. We'll review Amgen. All right. So tattooed chef, this is a really hard one because first of all, you're in a downtrend and you're in the downtrend because you're under this 32% line right here. Not only that, but your red line is below your yellow. And then it gets worse from there. You are below all 4 major moving averages. So what you're going to need is a lot of volume, a lot of green volume pushing up to get this red line to turn up like that. Yeah, this is a tough one. This is a tough one from all perspectives. So if it was me, I would recommend find something else unless you want to day trade it. But yes. What about Pfizer? I read a story from Pfizer today that they think that after your second vaccination shot, you will have 6 months of efficacy or something. Sick prank, Pfizer. All right, AMGN. All right, Amgen. So we're in this as a bid and ask nation. I would swing trade the SPY ETF. Not day trade it. I mean, you could day trade it if you want. So I like Amgen because we are moving up in a perfect beautiful uptrend. I like that. We bought, what day do we buy? We bought here, this day. And then we've had the pullback in price. So let's pull up a line chart and see what we got. So this is what I really liked. So we were creating these higher lows. We bought on a new high, which was the right thing to do. It ran up a little bit and it pulled back. No big deal. It pulled back here and now it's turning up on us. So hopefully we get that little pull vault again. All we need to do is break through this 249.92, this orange resistance line. If we can break through that, we're good. I hope that we get a run to 261, 262. I would love to get a run up here, but I don't know if that'll happen. So we shall see. But Amgen is looking okay. Leave it 260. Yeah, Llewellyn, I think that's what I'm thinking. It's not. Actually, let's zoom out a little bit. Let's see what we got here. What's our peak here is 258. What's our peak here? 260. Yeah, I think 260 is probably it. This wasn't the most ideal trade, but it is what it is. BJ's buy point. So we did buy BJ's. I think we bought it yesterday. Again, beautiful W formations, creating lower highs. Good uptrend. Bought it yesterday. Pulled back a touch. We're looking for the same thing, that little pull vault. So this BJ's can actually give us a run. I think BJ's will give us a run up to about $50. So this one's going to be good. Again, we're just fighting this resistance here of 46.08. Once we get some good volume coming in, it's going to be good. And for me, when this thing moves up and takes out this high right here, I'm going to add more right here. I only have a 25% position on it. So that is going to be it. Okay, I'm going to look at A because I have a friend that bought A who's in the bid and ask nation. And I like this. I don't know if he's in here or not, but it's coming up through the sweet spot beautifully. I love that we're over all four of our major moving averages. Great consistent volume for the past 5 days, creating those new higher low or lower highs. Higher lows. And yeah, it's looking good. So I do think that you'll get up into this 135, 134 range, and you'll make a good trade. So good job. Whoever found this. Can T go back to 32%? Well, it will go back to 32%. It's just a matter of when. Can T? Oh, $32. Oh, yikes. I don't know, Bogdan. Let me pull up candles here. Yeah, I don't know. This is heavy resistance with AT&T. Man, right here at this, what's the high right here? The high here is 30.74. So 30.74 is a very tough position. And even when it gets up here, what's the high here? 31.89. I don't know. You're going to need a lot of volume to get this thing going. A lot of volume. And if you don't get volume, it's going to be very hard to get back up into this range. All right. What else? Can you explain the lines we want to break through? The candles on this map. Sure. So I'm going to pull up, let me zoom in here so you can see this more detailed chart. So this is my daily chart. This is, each one of these candles is 1 day. Here's the volume down here. And then I could pull up a stochastic for you if you give me 1 second. No, let me reset this. There we go. Okay. So now so down here, this is my daily stochastic. Opposed to my other chart, which is my weekly stochastic. It trends by the week, so that's the overall trend. This is a day-to-day trend. So these are the major moving averages. The 25-day moving average is purple, the 50-day is yellow, the turquoise is 100, and the white is 200. So those are moving averages. Those are big resistance and support levels depending on which direction you're going. Now, these support lines here, you can add them on your charts or you can not. You can always see them. And as you get more experience, you will see them. So it's just where the stock price, so a resistance line, for example, it has a very hard time breaking out over resistance because there's people that are every time it gets to that level, they sell and take their profits. A support line is strong because when it drops down to this price level of support, people don't let it fall through there. They grab it and they buy it back up and try to, so they are just trading. This is swing trading. You're just trading in between this range of basically $30 and $31, and you just keep making $1 in both directions. That is exactly what happens that's what these lines are, for example. Guys, smash the like button, please, and give me some more stocks. Let's see here. What do I think of Tesla? I already did Tesla earlier. Walmart, good one. Let's see, Walmart. Oh, I want to do, I'm going to go, so we have a tracker share on Walmart. I love that we are moving up through the sweet spot here. As soon as we get, let me zoom in on this for you. As soon as we get a green engulfing candlestick that goes like this out and takes out that high of 3 days ago, 2 days, 4 days ago, whatever it is. Whenever we take out the high of 137.59, we're going to be adding a very small position to this. And the reason I say that is we need to get through our 250-day moving average over here, which is which is a strong resistance point. And you can see that Walmart has not been able to get through that. It's going to take volume like this day right here to propel and push through that 50-day and 200-day moving average. So Walmart has some work to do. Tracker share is perfect. Let's just be patient with it and go from there. Susie, I'll do Apple for you. Let's see. So we have a tracker share on Apple also. These are stocks that I really like to put tracker shares on because we're on the bottom right here, very nicely coming through. And it's just turning into this kind of dog stock. Dog stocks, they kind of just go on the bottom for a long time. The price continues to fall or bounces around, and it pushes up. Eventually, this red line is going to turn up like so. And once right when it crosses 32%, we'll be the first ones in it and grab it and get going. And we'll be able to make some money on it. So Apple has a lot of work to do. It's got to get through a 100-day moving average and 50-day moving average, which is very powerful. So I don't foresee that happening in the near future. They have some announcements coming out. I know they just announced their WWDC, Worldwide Developer Conference, but that's coming in June. So I don't know. I heard they were coming out with iPads. I don't know when that's going to happen, but we shall see. Qualcomm, another tracker share, and the same reason. We are coming along the bottom very nicely. We have a nice little trend starting. What we need to see here, I need to see this red line just keep gradually going towards 32% right here. Right when it crosses 32%, we can go ahead and grab it. You're going to have trouble getting through your 50 and 100-day moving average, but it's possible. And Qualcomm is very news driven. So if something comes out about chips, Qualcomm is going to do well. I do believe that Qualcomm and Intel are going to do very well in the next, I don't know, however long, because everyone just keeps talking about chip shortage. All right, relax. If there's a chip shortage, eventually there's not going to be a chip shortage. And eventually those stocks are going to go boom, boom. And that's just what's going to happen. Let's see here. Guys, join the Bid and Ask Nation. Sold out last night. A new tier just went live this morning. 39 spots available, $61. People in my tier are making so much money, it's not even funny. Not only are you learning to do trades by yourself, but we do trades as a group. It's a lot of fun. You get all of the Everything Money software. You get full access to me. It's great. Now we have a couple of other people helping out in the chat because it's growing so much. They're very knowledgeable. They're very good at what they do. And this is great. So smash the like button and come join the Bid and Ask Nation. It's wonderful. And I just can't believe how big the community is growing and how well everybody is doing in it. I'm just very, very surprised of how many people care as much as they do and want to make returns as much as they do. I'm buying cows with the money the Bid and Ask Nation has given me. Lily Livestock was sending me pictures of his ranch yesterday. He is buying cows that he is making. All right, Posh. Good Lord. Guys, what are you doing? What are you doing? Look at this. This is the biggest. This is the most chart I have. It barely became 50 days old. I don't know what you want me to do with this. The volume is almost non-existent relative to what they were on their IPO date. I don't know. If you want to do something with this, go ahead and trade on your 15-minute chart, but just be careful. Okay. It's 9:28. I think I did Logi last week, but let's see. Okay, good. I like it. So we're coming up nicely through the sweet spot. Yeah, this is great. Coming up through the sweet spot nicely. Oh, okay. So guys, we're at 2 moving averages right here. The difference is we're at the 50-day moving average and 25-day. So the stock price is already through the 100-day moving average, which is turquoise, and white is 200-day moving average. So you are through your 2 biggest moving averages. I am not going to look at NEO. You can, yeah, this is good. I mean, if you can get something today that breaks out above this little 50-day moving average, you're good. And we do have a little bit of a spike this morning, so this is a good stock. Just make sure your bid and ask difference is 1 cent when you buy it. Make sure you're not trading it until after 12 o'clock, not 12 o'clock. 9 what time is it? 10:06 a.m. Let the futures market settle down and go from there. Is it a 50%er? No, not a 50%er at all. So you zoom out and look at it. This might be this right here. I'm sure you're asking, is it 50% because of this little bit? No, 50%ers. This is not strong at all. This doesn't hold any value. All this can be is just pull back and go. 50% needs to be the whole chart is like this, and it comes down, and then it comes back up, and it can't get through like that. That's 50%. CCL is the perfect example of 50%. Let me find it for you. Susie, yes, we are going live at 9. Nope. We're going live at our normal time, 1 o'clock. Let me see what the market's doing before I do this. A little bit positive. Let me see what this is doing. Okay, and I want to see what Apple's doing. Okay, all right, I'll stay for 15 more minutes if you guys want me to. If you don't, I won't. All right, 50%er, CCL. I bet trading was easier in the 90s. Trading was definitely easier in the 90s. That's for sure. Okay, so 50% rule is you have this big, long thing going for a while, and then all of a sudden you fall. And then you have a very difficult time. So, okay, this thing keeps darkening out. Just remember the chart. I don't know why it keeps doing this. So you have your high, you have your low, and then you have the 50% area in the middle. And it's very hard to get through that 50%. So moves up, falls back in price. Moves up, falls back in price. Up, falls back in price. So this is what the 50% rule is. All of this is called overhang. And it's just negative pressure pushing down. Now, why is that pressure there? Because all of these people that were in this stock, when they were up here and this price fell down here, they're saying, if I could just get some of my money back, half my money back, 30% of my money, I'm a happy camper. So the stock price moves up and they go, boom, I'm selling everything. I'm just going to take my 60% loss and move. Falls back down in price. Moves up again. Same people that didn't get out over here. They're saying, okay, well, I'll get out this time. Sell, falls down. You get up here, they're like, oh, these people made an extra 5%. Wonderful. Now I'm going to sell again. And the stock price falls back. So that's what, hold on. It's so hot in here. Hold on a second. Man, this office is so hot. All right. So that is why you have the 50% rule. It's people going in and taking profits and just trying to recover 50%, 30%, whatever amount of their money. Especially if you've been in it for over a year. If the big guys, they're going to take their losses. They're going to take some tax harvesting losses against their gains and go from there. So be very careful with the market today, guys. Today is obviously we have a holiday tomorrow, no market day tomorrow, and then Easter Sunday. So a lot of the big guys in the market, all the big hedge fund managers, this and that, they're gone. They're not there today. They're going to their private houses around the world and whatnot. So they're just not in the market. So days like today, be very careful. If you get a little spike in price somewhere, go ahead and take your profits on it. If it's running into some kind of weird area like this, for example, if you're going into the 25-day moving average on CCL today and you have some profits, take your profits. And those of you that are wondering, when I say take profits, let's say you put $1,000 into a stock and the stock price goes up 10%, okay? So now goes up 10% and now you have $1,100. So what I would tell you to do with take profits is you sell $100 worth of stock. So basically you have $100 in your pocket. So you're kind of playing with the house's money now. So go back to your initial investment of $1,000. So when I say take profits, it means take this $100 out of the $1,100 off the table. That's what taking profits means. All right. I know the best time to go into the market and buy. I'm from Asia. To me, it's whenever. I don't try to time the market, and if I see something, I go and buy it. Like, for example, yesterday with BJ's, I went in there, bought it, moved up on me, stock price pulled back. So it is what it is. I bought it on a good candlestick, like I'm supposed to follow my rules, and I did. And it's not working out right now, but it will work out. Costco. Let's see. So Costco is looking okay. The thing that you're going to need to take out this high from, what day is this? High from Monday of 357.77. You're going to have to take that out and just be very careful. This 100-day moving average here, it's going to take a lot of volume to get through that. So just be very patient. Costco will do something. All right, RMG. What is this? This better not be some kind of IPO. What in the world? All right, it's not an IPO. It's just a hype stock. I will accept. All right, so you've had a little bit of a run. Actually, you've had a hell of a run. And it's been all over the map, but you actually did have a pretty good trend. So now you've turned into a downtrend. You've broken through 80%. So this has become a short. Now, with something like this, I don't know what they do. I'm assuming that they're some kind of private equity group that, they're public, but they do some kind of acquisitions, I'm assuming. Just be very careful with this because they probably have something to do with some kind of hype, and this thing can turn up like that all of a sudden and the trend can change. So what I would tell you if I didn't know what the company was, I would tell you it's a short. If you get a follow through tomorrow on Monday, go ahead and add to your short, but just be very careful with this one. Cisco. CSCO. Okay. So if this was me, I would... Lucas, I literally just did RMG. If this was me, I would probably be taking profits on this, and it's because my stochastic right here is just starting to kind of roll over on me, and like this. So it's starting to turn that red line. That red line looks like it's heading down to go through. So let's see. And you're running into resistance, and I think this resistance point is it's an all-time high, 52-week high. Yeah, if I was if it was me, I'd probably be taking my profits on it, but that's that. Target. All right, this guy has to be just trolling me. I can't even. Target. Good uptrend. You're in the overbought area. If you've had this for a while, great job. What you want to do with this is take out Monday's high of 201.96 and go from there. What percentage of cash are you using on each stock when you invest? So I trade about 3% of my overall portfolio on charts. I do maybe a smaller percentage on momentum. The majority of it is value investing, real estate, etc. So if I go into something like this, if I go buy a stock, I'm probably allocating 1% of my portfolio to a stock. Discovery and Viacom, that's a good one. Let's take a look. Viacom. Viacom, it's a short for sure. Damn. They got beat up. What's the stock price? $45. Viacom. Oh, dang. This might be some kind of value play. I should go start reading about this. But it's definitely a short. If you want to add to it, if you want to do a short on this, go ahead and when you get a new red engulfing candlestick down, you can go ahead and add to it. But you got to take out the low from Monday, which was $43. If it gets below 43, go for it. Oh, is that why that Discovery B thing got... I was wondering why Discovery Class A shares didn't get squeezed, but B shares did. This is exactly... Discovery A is exactly the same thing as Viacom, same chart, same situation. Take out the low of Monday. NLOK. What is that? Oh, LifeLock. Oof. Okay, this is a good teaching moment. So, let me see here. How do I make this bigger? All right. This is a good teaching moment. So this is called a breakaway. The stock price falls like it did. This is where it closed on the night of Friday, January 31st, and it opened the next morning down here at $17.60. So that is a complete disaster. Breakaway stocks are hard because when the stock price moves up, it's the same thing as 50%ers. People that make up some of their money say, okay, if I can just get half my money back, I'll get out. So they sell and it drops back down. Runs back up. People say, if I can just get 50% of my money, then I will get out. And they do, and it just falls back down. So breakaways are very difficult. These are the ultimate 50% rules. I mean, they're 50. So RJ, good question. They are 50%ers, but they're even worse 50%ers because the fall was so bad, it wasn't gradual. So no one was able to get out overnight. It wasn't a gradual fall where like CCL, which just went down, down, down every day. This was a shot. It smoked people. They just want to get back 50% of their money. Yeah, that's a big gap. Okay, Clorox. Somebody. Mozam, are you the one from Bahrain? I can't remember. All right, so I like that we're moving sideways. If this is one of your stocks or you want to be involved in this thing, excuse me, I would do a tracker share. This is a good one. And I think you'll get a pretty good run moving up to like $220 a share. So let this thing turn green and yeah. It looks like all the Corona stocks are recovering right now. Yeah, it does. Guys, smash the like button, please. Let's get it to 100. But yeah, it's so funny how housing is down. Housing is a disaster. Jobs are a disaster. Everything's a mess. Nobody's cruising. Nobody's flying. I mean, relative to what it was, but it's okay. All the stocks are recovering. We're good. It's crazy, man. Procter & Gamble, we're at 100 likes. Good job, guys. Thank you. All right. Procter & Gamble, it's not bad. It's not the best time to get into something like this, just because you're kind of getting into this you're kind of getting close towards 80%. If you're in this already, great job. Go ahead and add to this position when you take out the high of $137.60. That would be great. You guys will do a great job. Stocks only go up. That is absolutely true. Stocks only go up. Okay. DJ, yeah, we went over those already. And I know you're in the Bid and Ask Nation, so I will go over that after. EBIX? No, I wouldn't trade EBIX because I don't like fraud. So that's just me. I'm not going to go after something that's fraud. What is it over here? And plus, you're between basically the 200 and 100 day moving average. You can swing it back and forth if you want, but nah. Okay. Let's see here. AMD. I'll do AMD. Oof. They got a lot of work to do. So with something like this, where they have all of these moving averages to get through, I mean, you need a lot of volume. And it ain't volume. It's not this yellow line down here. This is average volume. It ain't average volume that you need. You need green days like this, like breaking out, like double average volume to get through all this crap. So it's going to be very hard for AMD to get through. Let's go look at their long-term chart. Yikes. This red line needs to turn up. We need to, man, this is annoying. We need to go like this and, okay. Go like this and start moving up. And it's going to take volume, guys. It's going to take volume. Keys. What is keys? Perrion. Like the water? Oh, no, it's Perrier. Never mind. Different French word. Let's see. Okay, this is a reverse split. Stocks are kind of up. Oil's up. That's nice. Okay. Snap. Snap, baby. Snapchat. Is that Snapchat? Yeah. Snap Inc. Well, they look bad from here. Let's see. Oh, I will do Goldman Sachs. Yes. Next. Good one. Swing trade. So I don't like this from a swing trading perspective because it's moving up and it's just running right into its 100-day moving average right here. Now, if our trend was up here like this and it was about to turn down like that, I would say sure, because you could run down and go from $52 to $40, which is the 200-day moving average. So I am Berkshire Hathaway, sure. I don't know what weirdo would ever ask for this, but I'll go ahead and do it. All right. Okay, well, technically it's a short. I can't say, okay, somebody block this troll. We have, I mean, if you have $385,000 and 385,702 to short this, go ahead, sell short just under 380,000. And go make some money. Have fun. All right. BRKB. Now you want BRKB. Yeah, tell him, Matt. Disney, I'll do Disney. Disney's one of these crazy ones. Oh, wow, Disney's a downtrend right now. Yeah, you can, if you want to do Disney, if you want to go short on Disney, just take out Thursday's low of $181.01 and I mean, maybe you can make some money on Disney until they say they're going to open their parks up 1% more and the stock price goes to 500 trillion market cap. So that's that. Goldman Sachs. Yeah, good call. Vinny. I like that. All right. Goldman, who asked the question about Goldman? Has potential short. Yeah, good call. It is a potential short. Running down through the sweet spot. Take out, today's Thursday, Wednesday. Take out Tuesday's low, whatever that was, and you can go ahead and short this if you get a candlestick like that. Just be careful. Banks are hard because banks lead markets, so just be careful with banks, going short on banks. And you can see, let's also zoom out. I'm going to go from here on. Look how many times, so each time, this is why I like using these charts. Every time I turn red here, it means that I've dropped through my 80%. I'm sorry. Every time I've turned red, it means that my red line has crossed below my yellow line. And here. So you can see every time that we turn red, you get maybe a stretch of 2 weeks that you're a short. And when you are short on it, you're not getting very much gain, are you? This one went totally against you. So this to me indicates and says that you should not be
this is a situation where you just need to know your stock. Know that when Goldman Sachs turns red, sure, technically can be a short, but how many days does it last for? And how big of the move is there? So to me, I'm not doing anything on Goldman Sachs, and that's the reason. So this is the advantage of knowing your stocks and trading the same stocks over and over. United has turned into a short today. It's dropped below 80%. You're going to need red candlesticks moving down like this to do something with to do something with United Airlines, but it's definitely a short. If you had profits on it, I would take them, but yeah, just like this guy said, the government bails them out. So GameStop, I'll do it for fun. I hope you're joking though, but good Lord. I don't know what to tell you here. Day trade it. Have fun. All right. So serious question. If you're trading momentum and only care about the price, what does the type of business matter? No, it really doesn't matter at all. Yeah, it matters zero. But, I mean, I guess I would be a little bit conscientious of a government bailout coming in if you're doing something. But, again, with United, going back to United, I'm taking my profits there. And actually, I'm selling my whole position there because I do not want to. I'm looking at my chart, and if I made a trade on a chart, I'm sticking with what the chart tells me and going by the process. So I made a video on Peloton yesterday. Stock splits, good or bad? I don't know. They just happen. I guess it depends what the reason for the split is. Didn't I already do Target? All right, I'm done. Thanks, guys. This was good. All right, I'll do one more because I picked on Zach a little bit last night in the Paul Shorts chat, so I need to make him happy. Oh my God. All right. So this thing is definitely a downtrend, but you're getting into this oversold area. So if this thing does make a new low, let me draw a line here and then light it back up. If this thing makes a new low below right there, I mean, you can add to your short if you're already in it, but I would not do that. I would just let this thing simmer down, wait for the trend to turn back up and go in another direction, and we'll go from there. So Mikey is in my office crying about the short position. Are we at 4,000? I think you should short more. Wait, Yahoo Finance. Oh, baby. We are almost at 4,000 on the S&P. So, Paul, I think we need to get our hats made for S&P 5,000 and Dow 40,000. And NASDAQ, what the hell? Let's go 15,000. So, all right, guys. You have a great day. I'll see you at 1 o'clock. Join the Bid and Ask Nation. Remember, you get all the software for free. You get total access to me. And at this point, more importantly, you get access to the whole community. It is incredible. These people are teaching them. I mean, if I'm on days like today where I can't be around very much in the chat, these guys are teaching themselves, making so much money. It's on another level. I just can't believe what's happening. So you guys have a great day. I will talk to you soon. Peace.